Stop what you're doing right now. Literally, if you own any traditional sports betting stocks, you absolutely need to hear this. Welcome to this explainer where we're breaking down a massive contrarian shift happening right under Wall Street's nose. Look, I know the fear right now. Retail investors are terrified that their digital gaming portfolios are about to get crushed. There's this growing panic that the standard sports betting model is completely under attack from new technologies. But while the rest of the market is scrambling and panicking, one contrarian champion is totally ignoring the trend. They aren't just surviving, they are posting blowout, record-breaking financial growth by doing the exact opposite of what everyone else is doing. You know, if Peter Lynch were looking at the digital gaming sector today, he'd probably tell you to ignore the noisy, overly complex new trends and buy the boring, highly profitable cash cow. And that's exactly what's happening here.
So let's address the giant elephant in the room, the looming existential threat of prediction markets or event contracts. Are they quietly killing traditional sports betting? Over the past year, we've seen retail and institutional investors alike become genuinely terrified that these new platforms are cannibalizing the industry. Think of prediction markets like a giant, shiny new vacuum. They are just sucking up user acquisition, capital, and attention right away from traditional sportsbooks. Costs to acquire users are rising across the board, growth is stalling for the major players, and Wall Street is sweating bullets that this prediction tech will mature and permanently disrupt the betting models we've grown so used to. But amidst all that market panic, a contrarian champion has emerged, Rush Street Interactive, trading under the ticker RSI. They have somehow built an absolute fortress against this exact competitive threat. The result? A staggering, mind-bending 126.8% surge in their stock price over a recent 12-month period. That is a wild number that makes a total mockery of industry fears. Wall Street is now viewing them as the ultimate anti-prediction market play. So by the end of this explainer, you'll have the exact actionable framework RSI is using to pull this off, and you'll know if they are the smartest digital gaming play on the board or just a temporary flash in the pan.
Section 1. The record-breaking quarter. Let's dive straight into the raw Q1 2026 financials that have analysts rapidly rewriting their models. Okay, so looking at this, in the first quarter of 2026, Rush Street Interactive pulled in an absolutely massive $370.4 million in net revenue. I mean, this wasn't just a slight beat. This was a total blowout. It resulted in the strongest quarter reported by any gaming company in the current period. To put that into perspective, that $370.4 million represents a massive 41% year-over-year revenue growth. So why does that matter? Because this is the company's fastest expansion rate in over 4 years. Accelerating your revenue off an already massive base is incredibly hard to do in a crowded market, but RSI is kind of making it look easy.
But hey, as the saying goes, top-line revenue is vanity, and bottom-line profit is sanity, right? Well, their adjusted EBITDA, which is basically their core cash profitability before all the accounting noise, surged 81% to a record $60.2 million. That represents over 16% margins. Oh, and add to that a net income of $26.2 million, which is up a massive 134% from the prior year.
So they didn't just quietly meet expectations, they absolutely crushed Wall Street consensus across the board. Net revenue beat estimates by over 12%. Earnings per share came in at 14 cents, easily beating the 11-cent estimate. And that's $60.2 million in EBITDA, a full 25% higher than the $48 million forecasted. It's a total clean sweep.
All right, moving on to Section 2, the casino first advantage. Here is the core strategy, the secret weapon that's insulating them from the whole prediction market frenzy. When you actually break down the unit economics, the iCasino focus is the undisputed heavyweight champion. Listen to this. Online casino players boast a lifetime value, or LTV, that is 3.7 times higher than a user who only bets on sports. 3.7 times. By hyper-focusing here, RSI is acquiring highly profitable, incredibly sticky users. And this is exactly why event contracts, which mostly prey on sports and news bettors, simply aren't a threat to RSI's core audience. They are playing a different game entirely. RSI's CEO, Richard Schwartz, actually calls this a compounding virtuous cycle. And it makes perfect sense, right? Because casino players are so inherently valuable, RSI is scaling massive revenue while actually shrinking their marketing costs. Their sales and marketing dropped to just 12.5% of revenue, down from nearly 15% a year ago. They're literally getting leaner as they get larger.
Driven by their flagship BetRivers brand, this casino-first strategy caused North American casino monthly active users to skyrocket by an incredible 62% year-over-year. That blows right past the 51% growth they saw just a quarter prior. They are just vacuuming up first-time depositors with highly disciplined marketing spend. It's super impressive.
Section 3, mapping the global growth. Because the U.S. is really just one piece of the puzzle here, their international expansion is providing a massive tailwind. Just look at their surge in Latin America. They capitalized perfectly on regulatory shifts, specifically the temporary removal of Colombia's 19% VAT. And what did they do? They reinvested those exact savings right back into player acquisition. The payoff was a 134% regional revenue surge, with monthly active users jumping to 543,000. Talk about a massive return on that reinvestment.
And, the next major growth catalyst is already here. Their upcoming July 13th, 2026 launch in Alberta's newly regulated market is poised to be absolute rocket fuel for the second half of the year. Alberta is opening up to competition with a highly attractive 20% tax rate. RSI is perfectly positioned to mirror the high-margin success they've already dominated with in Ontario.
Which brings us to Section 4, Wall Street's bullish outlook. Unsurprisingly, the institutional money is paying very, very close attention.
Following this Q1 blowout, analysts scrambled to upgrade their models. The average price target now sits at $30.09, signaling that the smart money is fully backing this upward trajectory. That represents nearly a 19% upside from recent levels, with the most bullish analysts targeting $33. And this bullishness, it isn't just based on blind hope. It's backed by RSI's own management actively raising their full-year guidance. They are now projecting up to $1.54 billion in revenue. But the real jaw-dropper here is their adjusted EBITDA guidance, up to $250 million. That implies a massive 50% to 63% annual growth in sheer profitability.
So when polled, 11 different analysts gave RSI a unanimous strong buy rating. Wall Street realizes RSI isn't just surviving the digital gaming bloodbath. They've basically written the definitive playbook on how to thrive while everyone else is panicking about disruption. But before we wrap up, I want to leave you with one final incredibly provocative detail. Despite dominating with this casino-first strategy and basically brushing off prediction markets entirely, Rush Street Interactive quietly just filed for a designated contract market license. Now, that is the exact regulatory key required to legally operate a U.S. prediction market. So it leaves us asking, is this just a brilliant defensive hedge, or is RSI quietly laying the groundwork for a total industry takeover? It's a fascinating play, and one we'll definitely be tracking closely. Thanks so much for joining me for this explainer, and we will see you next time.